To whom does the FXGC apply? The FX market features a diverse set of participants who engage in a market in different ways and across various FX products. The Global Code is written with this diversity in mind and is expected to apply to all FX market participants that engage in the FX markets, including sell-side and buy-side entities, non-bank liquidity providers, operators of FX e-trading platforms, and other entities providing brokerage, execution, and settlement services. While there can be no universal one-size-fits-all approach given the diversity of the market, the Global Code is intended to establish a common set of guidelines for responsible participation in the market. For the purposes of this document, a market participant is a person or organization that 1. Is active in FX markets as a regular part of its business and is engaged in the activity of the purchase or sale of one currency against another, or in transactions designed to result in gains or losses based upon the change in one or more FX rates, such as derivatives, whether deliverable or non-deliverable, either directly or indirectly through other market participants. Or 2. Operates a facility, system, platform, or organization through which participants have the ability to execute the type of transactions described in 1. Or 3. Provides FX benchmark execution services. And 4. Is not considered a retail market participant in the relevant jurisdiction or jurisdictions. The term includes any personnel who conduct the foregoing on behalf of a market participant. As a guide, the following types of persons or organizations would generally be expected to engage in FX market activities as market participants, as described in points 1 to 4 above. Financial institutions. Central banks, except where this would inhibit the discharge of their legal duties or policy functions. Quasi-sovereigns and supranationals, except where this would inhibit the discharge of their organizational policy mandate. Asset managers, sovereign wealth funds, hedge funds, pension funds, and insurance companies. A corporate treasury department or corporate treasury center entering into external transactions, either on its own account or on behalf of the parent companies, subsidiaries, branches, affiliates, or joint ventures of the group it represents. Family offices running treasury operations. Benchmark execution providers. Non-bank liquidity providers, firms running automated trading strategies, including high-frequency trading strategies and or offering algorithmic execution. Brokers. Investment advisors. Aggregators and analogous intermediaries or agents. Remittance businesses, money changers, and money services businesses in their interactions in the wholesale FX market. FX e-trading platforms. Affirmation and settlement platforms. Any entity classified as an FX market participant in the relevant jurisdiction or jurisdictions. As a guide, the following types of persons would not generally be expected to engage in FX market activities as market participants, as described in points 1 to 4 above. Pricing display platforms. Remittance businesses, money changers, and money services businesses in their interactions with retail customers. Private banking customers trading as individuals or via personal investment vehicles. The general retail public. The universe of market participants is considerably diverse in the type and level of engagement in the FX market. The Global Code is expected to apply to all of these market participants, but the details of how it may apply can depend on their underlying activities. In practice, the steps that different market participants take to align their activities with the principles of the Global Code will necessarily reflect the size and complexity of the market participants' FX market activities and the nature of the market participants' engagement in the FX market, and will take account of applicable law. Ultimately, the decision of what steps should be undertaken and in what manner resides with each market participant, reflecting an appropriate internal assessment. Annex 3 presents a Statement of Commitment form. The statement, like the code, is voluntary, and market participants may make use of it in different ways to support the objectives of the code, enhancing transparency, efficiency, and functioning in the FX market. The statement is accompanied by an explanatory note providing additional background. In addition to the statement, market participants can make use of disclosure cover sheets and templates for algo due diligence and transaction cost analysis. Cover sheets have been developed as a way of improving the accessibility and clarity of existing disclosure documents and can support market participants in meeting the range of disclosure and transparency principles within the code. Like the statement, use of cover sheets and templates is voluntary. The GFXC website contains a suite of guidance materials on how to use and publish cover sheets and templates.